Yeah, I'm 24 years in this space and of lending, and when I met Rick and saw the infoclosure model, I thought pretty impressive. So, you know, how to pick up properties at public auction, which is how all this got started. Rita, I'm not going to pick on you, I promise. I might pick on you a little bit. No, but I could make arrangements. I'm Adam Child. I'm president of Titan. Thanks for coming. Hopefully everybody got some food, and please help yourself. You know, step out if you need to get some more sandwiches. Help yourself. As Rick mentioned, the restrooms are right over here. And I just have to touch on the fact I've been around so long now. I know you probably think I'm still a pup, but I've been 24 years as a lender here in town. And sure enough, after 24 years, I can see a gentleman I did business with probably 23 years ago. So when I got to town, I could tell you when I got to town, Shea and Pima was a dirt four-way stop, which is now the 101 in Shea, right? And guys like John probably used to be happy to see guys like me come in the door. Then it got to the point where it's like, stay away. So this is a very short PowerPoint presentation. It's going to introduce you to Titan Capital Holdings, private money lender. You're here for the lending side. We also have the investment side. You'll be seeing invitations on that part later. What's important is interaction. So I can talk for 20 minutes on the PowerPoint, tell you who we are, but you're all here for a reason. You have some questions. There's no bad questions, so raise your hand and participate as we go through that. I think that's how it's been most beneficial to everybody. I also want to introduce Glenn Michaels, who's our vice president here and a veteran originator who helps us with the loan packages and putting everything together. And Glenn also comes in with experience from the banking side, FHA, VA, conventional, and that sort of thing. You have to stay till 1 o'clock to learn the real story about that. So welcome to Titan Capital Holdings, Hard Money Made Easy, and the alternative in A-paper you probably saw on the flyer. There is a return now of Alt-A loan products, and I'm going to use the bad words, subprime loans. I know, it's horrible, isn't it? So now that I've said that, I'm going to ask a question. Who in here knows who the largest subprime lender in the world is? Anybody? FHA. FHA is the largest subprime lender in the world, but they don't talk about it like that. But the largest subprime lender will do credit scores down to 620. They're not doing the 550 anymore? Okay. But we are a hard money lender with our own portfolio product. We also have different sources and investors now that are allowing us to bring back the Alt-A and, yes, the subprime for people that don't fit conventional or FHA. You met Rick, who started infoclosure back 15 years ago. And I'm not a realtor. I've just been a loan guy for 24 years, a finance guy. But when I looked at the model, I could see why he's had so much success with that business. It allows you to shop for properties at public auction, and literally, rather than be overwhelmed with 100 or 200 properties a day, you can go down to a street, you know, tile roof, 3-car garage with a swimming pool, without, and you can find and monitor properties at auction. So he started infoclosure back in 15 years ago, and in 2009, with one investor who wrote a check for $4 million, we put Titan in business. And Titan was put in business to provide short-term bridge loans to investors buying at public auction. We've since expanded that, since I joined Rick a few years ago, to a larger base of investors buying REOs, short sales, traditional real estate transactions, and then we brought Glenn on, and we brought on more traditional loan products, FHA, VA, and conventional as well. So you're going to learn a little bit about that. But Titan Capital Holdings helping create and facilitate investment opportunities, and that's a little bit of our background there. What I really like is we started in 2009, which was after the crash, so we didn't have any carnage to clean up. Hard money versus private money, and what is hard money? Does anybody know? We all know what hard money is. That's why you're here, right? Private money, anybody want to take a shot at that? No right or wrong answer? Okay. Hard money and private money is really the same. Hard money is hard money hard to borrow? Pretty easy to borrow. What makes it hard money is if you don't pay it back, right? That's where hard money comes from. Hard money is really private money. If you hear the two terms, it's really one and the same. Most firms like ours are funded by private investors, and then we issue the loans. It's hard money is just an old term from, if you don't pay it back, there's going to be trouble, Rita. But what is hard money? Hard money, private money, the same, just so you can pull that together. Hard money, again, typically firms like ours, made up of private investors. We function just like a private bank. You come to us, make an application, determine how much we're going to put down on the property, approve the property, determine the value, approve you as a borrower. The difference is we're quicker, we're more efficient, we're a little more expensive, but we're a vehicle that borrowers use as an alternative to the banks. You were buying at auction? Would you dare go to a bank for a loan to close at auction in 24 hours? Yeah, ain't happening. Okay. What do you do to borrow our money? You know, I have to admit, a couple years ago, you could fill out a one-page thing, name, address, social security number, put 20% down, and we'd have your deed of trust and note, and you're done. Even private money lenders like ourselves are coming under a little more scrutiny, and it's going to become more so beginning January of 2014. So Titan Capital Holdings is, as you'll see here, is a licensed lender in Arizona and Nevada. Hi, folks. Couple chairs over there, and there's also two right up front right here that might be easier for you to get to. Got a little room there for you. So I like to tell this story. I had a client call in a couple weeks ago, and he had a specific property he wanted to finance. His equity was good. We discussed price and terms and that sort of thing, and then I asked him to fill out the application and get that sort of stuff in. And he said, "What do you need an application for? You guys are a hard money lender. You just take the property, right?" Well, we still need to know who you are, where to find you, how to get the deed in lieu or foreclose, which isn't really our thing. Fortunately, we've had very few defaults since 2009. But how to qualify and borrow. Apply for your loan, okay? On our website, TitanCapitalHoldings.com, there's an apply button. You can print out the application, fill it out, send it in, or you can call Glenn direct, do it over the phone. But we do get an application. Also teaches us a little bit about you, and because we have a number of different loan products, we might have some different things that you might fit into better than maybe just our house product, for instance, okay? Get qualified. Again, fill out your loan application, get qualified. What price range are you in? How much do you want to put down? Where's the property at? Are you a short-term investor? Are you looking for a longer-term transitional loan? Are you somebody coming out of, the recent collapse in the market, short sales, foreclosures, things like that? We work through all of that, but we don't know that till we get a picture of who you are. Find a property. Verify available funds and loan program. Again, that's what you do through us. Inspect the property or obtain an appraisal, which we do, and close the loan. I mean, that's the simple part of the process. So I think I've got another slide here that's more about the qualifying criteria. There you go. So what do we look at for qualifying? We start with looking at the collateral. You were mentioning Casa Grande. And I'll look at Casa Grande. We won't look at remote parts of the state right now. We've done a number of transactions up in Flagstaff. I've done a few up in Anthem. I think that out west is Verrado. I'm not real thrilled with that yet. I don't think that's really come back much. But we do look at the collateral. It starts there. Most of our borrowers are in the Maricopa County proper area. We do lend in Tucson. We lend in Flagstaff. We lend in Las Vegas. And we're licensing in California. It starts there. What's your equity position? We're not an FHA lender, so it is more than 3.5% down. Our minimum down payment requirement is 20% on cost. How you guys doing? No, you're fine. A couple seats up here. If you right up here, help yourself. Gives me a chance to get a drink of water. So we look at the collateral because we're not a big bank. We don't carry mortgage insurance and that kind of thing. So if we end up having to take the property back, what are we left with? It's really a big deal for us. I'll wind back and tell you that since 2009, and you might appreciate this as an investor, but we've made over 355 loans now. We've only had 5 defaults. That's pretty good. That's less than the industry average. So, but I think that's part of, the reason for that is part of what we do with you folks as borrowers to put you into the right deal with the right equity and know that it's a success. We don't want to lend, there's hard money lenders are referred to as loan to own, not us. We like to lend, get paid, and get paid off. So it works real well that way. But we look at the collateral. So if you're making an inquiry to myself or Glenn, probably the first couple things are going to be, here's the property address I'm interested in. here's the purchase price, or if you're buying at auction, here's my maximum bid, and here's my equity position. I want to put X amount down, okay? We have a gentleman who was successful buying through auction yesterday, and I think he was prepared to go to about 260, and he ended up getting the property for about 240, and he contacted us and needed a loan for $40,000. So that's an easy one. You know, he's putting $200,000 down on a 240 acquisition, so he truly just needed a short-term bridge. We have other people that might buy at the 150 and want to do that 20% down, so they'll put their $30,000 down. We'll do a loan for 120. Just depends in there. But you want to talk to us about the collateral, talk to us about the equity, and because a lot of our loans are short-term, 6-month, 12-month, 24-month, though we have more longer-term product, but I think that's the space maybe a lot of you are interested in right now. What's your exit strategy? Is it a fix and flip? Is it a buy and hold? Are you waiting until your credit recovers and then you want to put a conventional mortgage in there? We have borrowers and investors doing a couple of different things right now. As an example, we had an investor pick up a property at auction recently. He put 40% down, so we did a 60% loan. It was easy. 700 plus FICO borrower, but again, our money's quick, easy, available, that kind of thing. He had two strategies. He was going in to clean up the property, so carpet, paint, clean up the landscape, get the pool functioning, that kind of thing. And then if he felt he could hit his goal for sales price, he was going to sell it. If not, then he was going to put a renter in there, and this is what some of the people are doing right now. We were talking about the tighter margins. How do you offset some of the tighter margins? If you can get your margins in short order, investors are still doing that. If they can't, we're back in an appreciating market. So then what the investors are doing is buying the property, clean it up, put a renter in there, let it appreciate over the next 12 months, then they'll sell it. Okay? Yes, sir. Great question. We start with acquisition as is. Okay? And it's a great question, and what I can segue into is we look at it as is because, unfortunately, if you buy it today and something happens to you on Monday, then we're left with it as is. Okay? But what we do look at is we look at, you know, what do you estimate to put into it for rehab? What's your rehab? So we'll look at it as is. What's your rehab? And then what does it look like it's going to be worth after the rehab? Because we still have to look at if something happens to you, what do we have to do to either get out of it as is or to get it to that rehabbed value? But we do put rehab seconds in place. Come on in. We've got up here by Judy. She's hoarding all these chairs. Come on up and how about that? But that's a great question. Thanks for asking that. But we have a number of investors who will buy, put their 20% down on a 150, and they've got a $20,000 rehab budget that's going to make it worth $225. So we help you with the purchase, the 20% down, and then we'll put basically like an open credit line in place to draw from to do the rehab, and we just control the draws to make sure it all goes the right place, and we'll play off that future value that way. Does that help answer that question? Okay, good question though. So the collateral, the equity, you know, what's your exit strategy? You know, 6-month, 12-month. You know, the gentleman I just described to you wanted to get out in 6 months, but we talked about it and we put him on a 12-month loan. Just, you know, we don't have prepayment penalties on our loans, and we'll extend for a couple of months. I mean, again, we're here to help you as investors be successful. You know, not chase you around with my hockey stick or anything. So we just want to have it make sense. So he thought he had it sold, and now he's got a renter in it. He's going to probably go the full 12 months, or he's credit qualified, so he may get an investor mortgage and take us out. So, but those are things that when you call me or you call Glenn, have those things in your head. Know exactly, here's the property I'm talking about. Here's what I'm looking at putting into it. Another scenario, we have a couple who owns a property free and clear, and a very nice property in old downtown Phoenix area. They picked up another burnout. They actually wanted me to do a loan on the burnout to rehab it. I don't want to do a loan on a burnout because if something happens to you next week, I'm left with a burnout. So what did I do? We put about a 60% loan-to-value cash-out loan on their other home. It was free and clear, and they used that cash to go do the burnout, got it all done, and now they have that property sold. Glenn's working with the buyer on that one. It's going to sell and pay us off, and they'll probably go do it again. So just another idea on how to do that. The borrower goes back to the application. Again, who you are, we actually do need to know who you are. I know you're Rita. Got it. The ability to pay and service the debt. If you're looking at a long-term loan program and you're talking to Glenn about one of our long-term loan programs, we're going to probably want to look at bank statements, tax returns, pay stubs. You know, we're not going to scrutinize you like a conventional loan because we've got a lot of flexibility in that area. On the short term, we just want to know, you know, what's your ability to service the debt? Do you have cash reserves? Do you have income? Are you an investor in this space? You know, so just be prepared to talk to us about that. You know, again, we're not here to, you know, put you through the ringer, but we do want to know who's borrowing our money, what kind of property you're getting into, and hopefully our input will help make you even more successful in that process, okay? Yes, sir.
Banks won't give loans that we don't show any income, but if we show assets,
Yeah, traditional, yeah, traditional.
Have income.
you have to have income.
On a conventional FHA, any of those, you cannot get a loan today at a bank without an income. Can't do it. We have a state program, we'll talk about that later.
Yeah. But again, another good question, but yeah, any bank you go to today, you're not, any bank statement program, stated income program, yeah.
And then offset, sorry, I'll ask these questions.
Oh, you're good.
I don't know what.
It's an old program.
What's that?
It's a very old program. It's gone.
So keep asking the questions, so you're good. Good. And the last thing I'll touch on is the credit. And everybody goes, oh, do you pull my credit? Yes, we pull everybody's credit, okay? But now let me tell you this, we're not credit score driven, okay? I had a gal who was a borrower who had 550 credit score, but it was all tied to one thing. Her primary residence FHA loan that she's been trying to modify for a year and a half or something, okay? She's been on her job for 21 years. She's been in her home for 19 years, and the only blemish on her credit report was this modification going on with her FHA loan. She's 550. We don't care. What we do look at on the credit report is just to see that you are who you are, and then we do look for train wrecks, okay? We're not credit score driven, but if somebody's in the middle of a Chapter 13 bankruptcy with lots of tax liens, lots of judgments, and a whole bunch of other stuff going on, I'm probably going to take a pass. I've done about 3 passes like that in 3 years, so it's not too often, but I'll just tell you straight up, if you're in the middle of a Chapter 13 with a lot of tax liens and all the rest of that stuff, I'm going to probably take a pass. Do you know why? Chapter 13 is a restructure, right? And there's a chance that our lien on a new property under an individual in that situation could be put at risk. Yeah, so that's what we look to stay away from, okay? But we're not credit score driven. Yeah, Glenn.
I'm a credit counselor. John knows this. I've helped tons and tons of people get bad credit to good. I'm very highly trained. I have actually another company that I'll refer you to, or I can do it. This teaches you how to get the right score for a paper. But we can do down to 500. We'll talk about that.
Great.
Okay?
Perfect. Thank you, Glenn. And again, that's a great comment, because a lot of our borrowers might be using our money just short term because it's convenient. A lot of our borrowers might want to be using our money as a transition because you're coming from a credit challenge situation, you're trying to rebuild yourself. And again, that's where we can help you with the loans, and then Glenn can also counsel you on how to get the credit scores back up. But we do pull credit in the application, and people need to know that. Why use private money? Because Titan says yes, the banks say no. We've already been talking about that a little bit. If anybody, how you doing?
Late.
You can come sit right in front of me if you want, Jim. Rita's getting tired of me picking on her, so now I got to pick on you, I guess. No, thanks for coming. You know, and again, this is for illustration purposes, but a lot of you kind of get the idea now. The collateral, the equity, we're quick to perform. We do check the title. We get title insurance, and we check the title history. We get hazard insurance, make sure the property's insured. Another, you know, I've got a lot of these true stories, but we had a young kid who was the son-in-law to one of our regular investors, picked up his first property at auction, not too far from here, and round numbers, I want to say he bought it for about 70, and we did the loan for about 50, and about a week after he bought it, half the house burnt down. The plumber was there doing some torching, something happened, he goes back the next morning, half the house is burnt down. So We did verify hazard insurance was in place. We always make sure that hazard insurance is in place with Titan listed as additional insured. A couple weeks later, he calls up. He goes, "Hey, Adam," he goes, "I need to run by your office." He goes, "I got an insurance check for $55,000. He goes, "I just need you to sign it over to me." I said, "No, I'm not going to do that. You could sign it over to me. We'll hold it here." But that's all we did. He got a $55,000 insurance check on a home that we had a $50,000 lien on. So that's why we make sure we're listed as additional insured. We sat on the funds, worked with him, allocated the funds like a construction project. Took a little longer to get the home done, did a beautiful job, got it sold. But those things actually do happen. So, yeah, they do actually happen. How expensive is private money? A typical flip, and I just put these numbers together. Our rates will go up to, hey, thanks again for coming. He had to duck out early. Our rates go up to 18%. Our 6-month loans are at 16 and 18%. Our 12-month loans are at 14 and 16%. After that, it just depends on the property, the overall term, what your strategy is, and that sort of thing. Smaller loans have a little higher rates than bigger loans just because of the size of the asset. But we are, on our typical investor loans, we're interest only. So most of the time I get people that they don't want to ask, but they don't know how the interest only works, so let me explain how interest only works. If you take a loan amount and assume a rate for us, a short-term rate of 16 or 18%, and this is an illustration, but you take that loan amount, if it's 16%, take the loan times 0.16, divide by 360, okay, and that tells you what your daily interest rate is. We use a 360-day year, 30-day month. Loan amount times 0.16, if it's a 16% interest-only rate, divide by 360, that's the daily rate, times 30 is the monthly rate. If you borrow our money today and you pay us off in 95 days, you pay 95 days of interest, period. Make sense? So going through the illustration, how do you use short-term hard money like ours to profit? Well, the rate sounds expensive, but you buy a home today for $150. You borrow 100 at 16%. On that calculation, which is the 100 times 0.16 divided by 360, it's $44.44 a day. If you sell it in 120 days at $200,000, your hard money costs $53.32.80 plus fees for 120 days. On our short-term loans, our fees are $950. Okay? So you made $40,000 using hard money in 120 days. Anybody have a problem with that? Sounds good, right? Any other questions so far? Just because you guys are all eating? On our short-term stuff, we have no points. So good question. 6-month, we're no points. We're 16 to 18%. $950 in fees is always there. If you're at 12 months or 24 months, we'll have points relative to the size of the transaction and what your strategy is. Yeah, but our rates will go. Our typical short-term, 6, 12, 24 months, will go 12 to 18%, 2 to 4 points. But if you're at the 16 to 18%, there's no points. So
What are the fees?
$950.
What are they?
Just doc prep and processing. Yeah, $425, and a $100 inspection fee. We do a broker evaluation, and then a lot of times even after we close on the property, we go out and get a BPO. So typically our files will have two valuations in it.
Very cheap.
Yeah. This touches on that as well. Rules of thumb: shorter term loan is going to have a higher rate to it, with lower points or no points and lower fees. If you know you're buying a property today and this is a 3 to 5 to 6 month deal, go for a short-term loan, higher rate. You can pencil it out, and you'll see that it makes sense, and you don't want to pay much in fees. Okay, I still do a makes sense kind of a thing, whether it makes sense for me or makes sense for you. You want to look at it that way. If you're going longer term, 12, 24 month, 36 month, 10 year, you're going to see lower rates and higher points, just as a rule of thumb, so you know what you're looking at. Okay. Prepayment penalty versus no prepayment penalty. As you and I were discussing early on, we've got a lot of good competitors here in town. We're friendly with a lot of them. There's a lot of them I don't know. But our loans, none of our loans have prepayment penalties. Okay? So we don't want to hold you hostage. We want you to borrow the money, make the monthly payments, pay us off, and move on. Okay? But as a rule of thumb, especially if you're looking at short-term hard money loans, If you're talking to somebody else besides me, and there's plenty of good competitors out there of ours, but just make sure you're not getting into something that has a prepayment penalty.
What is the cost to extend the loan?
That's a good question. If you're on one of our 6-month loans, okay, we'll work with you for up to 60 days, just without an extension fee. But if it looks like, if you get to the end of 6 months and it looks like you need another 4, we're going to have a $500 extension fee because we have to renew your note. Okay, not real expensive. But we'll always work with you on that. So it's, if you're within 30, 60 days. We have plenty of investors who are. So, But make sure you don't have a prepayment penalty. Cost of funds versus the gain of the opportunity. Again, if you're looking at something and you want to borrow our money, if you share the numbers with us, myself, Glenn, we'll help pencil out for you how you're going to have a return in there. There's times when maybe borrowing our money doesn't make sense. But in terms of a short-term transition, or if you're coming from a beat-up credit history and you're trying to get back to a good credit history, then that's when you're going to want to borrow our funds. Return on investment. You always want to be penciling out the return on your investment versus the cost of the money. So the cost of our money is real. We pay our investors typically 8, 10, 12%. So depending on what we pay our investors, because remember we're private money, we're a private bank, depending on what we pay our investors, we have the margins in there that we work on. It's no big secret. Okay? But so don't pay attention to the cost of money, pay attention to what kind of return on investment can you get by using our money to get into that investment. So private money is a bridge to profits. I just like the illustration. It's a good illustration. Typical loans we fund, and we've talked about this from the beginning, we started originally to help investors buy properties at auction. That is really our niche. Auction's been real busy the last few years, as probably many of you know. There was a point we were doing an auction loan every day. But we are geared up for that short-term auction purchase. How many of you are playing in the auction space? I know you are. Who else playing? You're playing in the auction space? So if you're not familiar with it, welcome. How are you? That's okay. We've got a chair up front here and a chair back there. Future investor, I can tell. Hi, Drew. How are you? Good. And we're doing this every couple weeks, so we'll get notices out and feel free to come back. So, but auction purchases, here's how it works. If you're bidding at auction today, as you know, you're bidding at auction today, you're successful, you have to pay for that property tomorrow, 24 hours, by 5 o'clock tomorrow. So that is a niche of ours. We're geared up to do a quick evaluation of the asset, to put your loan package together very quickly, to put the funds in order, and to be prepared to pay for that property in full at the trustee by tomorrow at 5 o'clock. That's been a niche of ours. We have a few really good competitors that play in that space, but a lot of private money lenders don't play in that space. So the short-term performance. If you're in Las Vegas or California, we're in Las Vegas now, we're opening up in California, those are same day. When you show up to auction to bid, you probably know this, but when you show up to auction to bid in Las Vegas or LA, you have to go up to the trustee and show them your checks for the property you want to bid on. So we have a different approach to setting those up for same-day funding. Short sale purchases, REO purchases, traditional purchases requiring fast close. Last time I did this class was back in March, and I'll ask the same question now. So how many here are real estate agents? A lot. How many of you real estate agents have been writing contracts and you keep getting blown out and blown out and blown out? Is that happening a little bit? Because there's 4 or 5 or 6 offers coming in, and you get
It used to happen all the time.
right?
Yes.
And maybe I don't have my finger on it right now, but I know earlier in the year it was happening like crazy.
Still right.
And is it still?
Oh, yeah, we checked on a property the other day that had 6 offers cash, all cash. All cash
There you go.
offers, 6 of them.
Yeah. Well, then if it's 6 all cash, then you really have to
Yeah.
evaluate which one of those you're going to
Say,
take.
well, I think, get it closed quick.
Yeah, so this is another area we've opened up our short-term funding to. So you're writing all those offers. Okay, that's an unusual one, but you certainly might have 3 or 4 if it's a good property. You might have 3 or 4 or 5, and the seller is always going to go highest price, but then cash is cash. Because I'm a 24-year veteran of the mortgage industry, right? And I'll be the first to tell you that industry is messed up, okay? So the closing might take place in 30 days, 45 days, 60 days. If somebody has to get a loan, it might be a 30-day closing. It might not, you know. But what has happened is good real estate agents have figured out how to affiliate themselves with companies like ours. You're going in to write an offer on a property, you know it's going to be a competitive situation, but then you have to get over the hump of saying, hey, call Glenn or call Adam, use their money, you only need it for 30 days, it's going to be 18%. What? Okay, but you have to put, that's where you have to get pencil and paper down and you go, okay, it's 18%, but it's daily. It's 30 days, but you're successful on the property. Maybe you saved yourself from bidding it up $10,000 by getting in there and performing in 5 days and closing quickly, right? Then you can come in later on with a conventional loan that we can help you with or your other lenders got in place for you, and you pay us off. But we have been working with agents and their clients recently just because of that whole competitive situation. And right away, after my last class like this, we had an agent come back a week later. She was successful in getting a property because she wrote it up for a 5-day close, period.
Have you been doing this for long? That's a great idea.
What's that?
Have you been doing this for long?
Since spring.
That's a great idea.
It's a great idea, and I'd like to see all of you do more of it. And again, the big obstacle seems to be telling your buyer that it makes sense to borrow our 18% money for a month. But you know, all they have to do is maybe lose a couple homes and then go, okay, who is that guy you said to call? But you know better than, you real estate agents know better than your buyer. You just have to educate them. And sometimes it's easier, sometimes it's harder. I get that. But know it's an alternative, and you're exactly right. I've been trying to promote that since spring, since, you know, I'm getting all the agents coming in, or actually different than that. I get my clients calling up going, I'm on my 5th home now. You know, can't get it done, can't get it done. You know, I'm losing out to all the cash offers and stuff like that. I went, okay, we can fill this space. So, yeah, keep that in mind. Yeah, you can have your borrower might be super A+ and have their loan at Wells Fargo all ready to go, but they really want that house. It's perfect. It's right by the school. The kids' friends are there, all the rest of that stuff. It might be a situation where you go, you know, if you really want this house, I think we need to do a 5-day close. The only way to do a 5-day close is you get this guy lined up to fund you in 5 days, and then you take 30 days or 60 days or whatever, bring your mortgage in and pay him off. So, makes sense? Yes, sir.
Well, since they're buying that as a primary residence, what are you going to be doing here with Dodd-Frank?
Well, we have to write it up as an owner-occupied loan, which we're set up to do that.
Can't do interest only anymore.
No, then we do a principal. Good question. We do a principal and interest, probably a 10-year with a 10-year AM, principal and interest, but no prepayment penalty. No balloon. Yeah, there is no balloon in there, but you can pay us off early.
Yeah, with
Prepaid.
Dodd-Frank, you can't do those.
Well, but we're not. We can do 10-year. Good question. We can do 10-year with a 10-year AM. But in a lot of cases, the borrowers that are doing this might not even pay us off till they move in because it's a transitional. But good question, and we would need to know if you're borrowing our money and moving right in, is it an owner-occupied loan, in which case we'll set it up a little bit differently. And that's going to be a 10-year, 10% principal interest, no prepayment penalty.
589 is
Good question. Yeah.
5, it's different.
Traditional purchases requiring fast close, we've been talking about that. Cash out loans for rehabs, I touched on that a little bit. Construction. I'm probably one of the few guys that's actually doing quite a bit of construction. I did a number of properties up in Flagstaff last year for a builder I've worked with for over 10 years. They were all pre-sold, so it's pretty easy. We did 6-month terms. We're at 14%, 3 points or 4 points on those. We monitor the advances on those. And they all paid off within 6 months. We have probably 7 construction loans we're working on right now. I think 4 are pre-sold, and the other 3 I haven't funded yet. I'm looking at are specs. But what happens when inventories start to go down? Demand goes up. Builders, John, coming back, right? So, you know, we're entering into that. You know, we still have this other thing over here on the side called the economy. And the economy needs to get stronger probably to make housing even stronger. But housing is certainly off the bottom, seems to have stabilized a little bit, and seems to be back into a good, consistent, appreciating market, right? So as inventories drop and people are bidding for multiple homes or running up against a lot of competition on homes, now they're starting to say, well, I was driving down the street and I saw a lot, and they're reaching out to their builder and they want to build a home. So we're doing construction loans, and each one's different, but certainly if you've got a client that's interested, I'd say let's have that conversation. Alternative loan programs, if we're not doing our in-house owner-occupied, which we don't do many of, but we do, if we're not doing our in-house owner-occupied, we do actually have a return of the 12-month, 24-month bank statement program, stated income program for the longer-term loans. Rates on those are going to typically run 8 to 10%, 30-year amortization, 15-year amortization, no prepayment penalties. So I get the gist that most of you are more investor-oriented here today, but we do have that product coming back. And Glenn's been talking to all his A-paper buddies out there, and not many people are talking about it. We have it. So something good for you agents to know as well. Yeah. Conventional FHA, VA, we have the A-paper products here because, again, we have a lot of our short-term borrowers who use our money transitionary, and they may want to arrange a longer-term loan to take us out. And we now have the ability to do that in-house. So. Loan packages, I've touched on this a little bit. 6-month flip has been our specialty for a long time, but because the auction's getting a little bit tighter, we've gone into our 12-month equity builder for the buy and hold strategy, or a 24-month transitional. 24-month transitional might still be that same investor borrower. They just want to go a 24-month term, maybe rent it out for a couple of years, let the home appreciate a little bit more. Okay. End user bridge, buy today with conventional exit tomorrow. We've touched on that a little bit. And the construction loans. I had a story. Oh, I know what the story I was going to tell. So we have another gentleman who's buying a home right now. He's been with a car dealer for 10 years. Okay. He's buying the home. It's around $90,000 or $92,000. He's putting $30,000 down, so he only needs a $62,000 mortgage. He was in the car business for 10 years. He just got into a new business in a sales position that's all commission. Good credit, but he's not going to get any kind of conventional loan anywhere. Right. We're doing a owner-occupied 10-year, 10% principal and interest, no prepayment penalty for him to buy that home, good down payment, and he'll be a candidate in probably 12 months after a tax year and 12 months of documented commission income. Is it 2 years now? That's how rusty I am. So he'll be a candidate in 2 years to take us out, and he can get with Glenn, take us out by FHA or conventional, that kind of thing. Now, I don't know about some of you in the room, but my first mortgage in 1985 was at 12%, principal and interest.
What are you doing with your, do you sell some of your paper? Or?
We do. We do. It just depends. We actually have more investors than we have paper right now. They're lined up as quickly as we can write it. They're wanting to look at it and buy it.
And do you service your loans in-house, or do you send them out?
Another good question. With our portfolio loans that we fund in-house, we service them in-house. When we bring an investor in to that transaction to take us out, we transfer all our servicing down to security title on Central Avenue. Good question. Yeah. I was told, and I don't remember, just because I'm old and gray, and I've worked with the group down there at Security Title for so many years, and the gentleman Mitch Medgovich of Cattleman's Mortgage, he set us up on our note program. He's worked with them for 20 years. They do a good job. We really haven't had any borrower or investor complaints yet, and they've just been around for a long time. I've heard different stories about different people, but right now we're having good success with them. But that was a good question. If we fund it internally and it's a short-term loan, we service it right here. And our borrowers, we give you deposit information, and each month you go in, make a deposit right to Wells Fargo, or you drop a check by or mail it. But when we do bring an outside investor in, then we transfer servicing down to security title.
Do you do a loan over 12 months, or you do an impound account?
At 24 months, we do an impound account. Anything 24 months or longer. 12 months, I'm not. At 6 months and 12 months, we want hazard paid up for the term of the loan. So
Over 12 months.
as soon as I go from 12 to 24 and out, I'll do an impound. Yeah, 6 and 12 is no impound. But if you do a 12-month, I do hazard insurance paid up for the 12 months, with Titan listed as additional insured, and property taxes paid up at least through half that period. And that's how we get away from the impound. Yeah, but more good questions. Thank you. Everybody hear all that? Good questions over here. Where did I leave? We're a licensed lender. We didn't used to be, but again, we are Dodd-Frank compliant. We're Safe Harbor compliant. When we do short-term investor loans, we don't really need to jump through those hoops, but my anticipation is even the short-term hard money lenders like ourselves are going to start falling under more scrutiny. So our short-term loan products are not that scrutinized that much. Our longer-term loan products are subject to scrutiny. But we're a licensed mortgage broker in Arizona and Nevada, and California is in process right now. So our objective is to be in the 3 southwestern states. So same-day funding program. I did talk about this a little bit. Inventory tight. Don't miss the opportunity. That addresses the how do you get in there and compete with everybody and get a deal today that you might lose out to somebody for cash or something else. How about the 5-day close? So keep that in mind, right? Buying at auction, same day, 24-hour. We talked about that. For those of you that play in that space, we are set up to fund in that space. That's how it all started at the beginning. Buying with performance, quick close, that's the 5-day. Be prepared with vital information, set up for the win. What I mean by that is don't get the property that has a 5-day close and then give us a call. I mean, you can, but it's prudent to have your borrower get in touch with us. It's an application. We start the files, start the process. Lisa back here will get things set up, but it helps. You know, even if you're buying at auction, get in touch with us in advance. Get an application done. Let us be ready to go when you're successful with that property. So does that make sense? You guys all getting the after lunch. Need a nap. Getting started is easy. Again, which for us it just starts with that application. And then you go back to what we talked about earlier, which is what? The collateral. Tell us about the property you're buying, the equity, what your exit strategy is, what you want to do. Okay? Call to discuss your project and available funds. We have multiple sources of funds. We've got a guy who was used to doing business with us for a long time, buying at auction. He bought at auction, like, as an example, like yesterday, and then he called me about 2 o'clock today and said, oh, I need $200,000 by 5. We didn't train him properly. We ended up getting that done, but again, on any of the short-term funds, especially when you're buying at auction, and if some of you know when you buy at auction, you know, there's a $10,000 deposit that goes to the trustee when you're successful, and if you don't show up by 5 o'clock tomorrow with your money, you lose 10 grand. That's kind of a sting. We haven't,
10 grand get back to the investor then, or does he just keep that?
I think the trustee just keeps it and applies it.
Do you make him keep that as part of his down payment, or depending on
So that's a great question. Let me address that on how we do loans on the auction process. So he's asking what happens to the 10 grand, so let me have a little bit of that conversation for you because we haven't done that. If you're buying at auction, and I'll just use simple numbers, you bought at auction today, you're successful on a $100,000 property. We look at it, looks good for 20% down, which is $20,000, right? When you were successful today, or when we were successful for you, there's a $10,000 deposit that you have that goes to the trustee. So we need 20% down, so how much more do we need? 10, yeah. So the 10,
property was, say, 35?
then we use the 10 as a minimum. So if it's 35, then we use that as a minimum on our loans, 25. Yeah. Gotcha. And again, another good question. Everybody hear that? If you have 10,000 that goes to the trustee, but you bought at 35,000, do you get 3,000 back? No, we take the 10 to the 35, we do a loan for 25. So good question. But yeah, the 10,000 is always part of your down payment. We put together the closing costs, we do our due diligence, we do our inspection, we fund the 80. You come into our office, we actually get a $90,000 cashier's check for the trustee, you give us the other 10 and write a check for your closing costs, your title insurance, hazard insurance, and then we get it delivered down to the trustee and you're done. And at 5 o'clock you either have an empty house or a house you have to kick somebody out of.
So you're buying title insurance on the back?
Yeah, we have a couple title companies that we work with directly, and they help us do all the title searches in advance. And then, so their search is done in advance to verify lien position, any, you know, is there a city lien out there? Is there something that's even going to convey when somebody buys at auction? We get all that information, and even though we don't get the title policy until after the trustee's deed comes and we get it recorded, we don't get the policy till then, they're doing all the homework up front to insure us and insure the borrower. Good questions. You've been playing this space for a little while? Good.
What is your application?
What is application?
Do you run a tri-merge or a single score?
Run a tri-merge, and the application, if you go to our website, it's just a standard 1003. And just because we're uniform that way. So all we want is your personal information, employment information, assets. We pull the 1003 tri-merge, and have your liabilities.
Is there an application fee to the?
No. No. Yeah. Thanks for coming. Appreciate it. Yeah, you just print it out, give us the basic information. We'll pull the credit. You know, we do that up front. And then if you buy, we're all set. So I try to keep it in an hour and respect your time and the lunch hour here, but good questions. Are there any other questions? You guys have been real quiet over here. We do it. We get an appraisal subject to completion. So like right now, the ones that I'm underwriting, the lots are free and clear, which I prefer. But if it's got a real good equity position, I'll look at some variance there. We get your plans and specs, cost breakdown. Are you the actual contractor? Okay. So get your plans and specs, cost breakdown, your contractor information. I use primarily Tri-City appraisers if they're somewhere close. They'll get an appraisal done for us subject to. They'll also do the inspections for us as the draws come in. Are you looking at some spec stuff now then? Okay. What part of town? And you're just like a lot of builders I've known for a long time, and it just makes sense right now. The market's coming back. You know, if you've got some deals, I'd be happy to look at them. You know, and it just starts with that. Give me the property information, you know, the lot, what you're paying for it, how much you have into it, the cost to build, and I can give you some rough numbers just to get you started. So thanks for that. This side's been real quiet. Okay. Yes, sir.
What is your minimum LTV?
30%. That's a good caution. Jim just said, what's our minimum LTV? Okay. I said earlier that we look for 20% down on cost, but we're looking for a 30% equity position. So if you're buying that home at auction for 100 and you're putting 20% down, and we say, yeah, we're good at 20% down, I'm looking for the property probably in as-is condition to be worth 110, 115 or more. So we really want a 30% equity position. If you're buying at 100 and I think it's worth 100, I'm going to probably come back to you and say, we need 30,000 down on that one. So,
Pardon me, I'm not speaking real good. My John knows me, I can't normally shut up, but my pain is really screwing up my mind. So
Glenn just had his toes rebuilt here.
yeah, totally. I'm messed up. But let's say find property, not a hard money deal, and it's just a great house already built, and you want to buy it, maybe keep it long term, whatever. Alternative loans, we can do 25% down. A little different, but still a great way to buy.
If you're longer term on it.
Yes.
Yeah, good.
Could be, but you could buy it, maybe just new countertops, and next thing you sell it, the value goes up just from one thing. I've done it. Hundreds.
Let me ask what should be helpful to me here. How many of you came to learn about short-term hard money? Okay. How many came to learn about construction? Okay. Good. How many came to learn about the longer-term alternative loan programs? Okay.
How about free lunch?
And then my last question is how many came for the free lunch? That's the true, see? Yeah.
How many
Thank you all. and,
realtors?
Most.
Okay, I can change your life. You may not have come to hear about it, but alternative loans are back. We have got a program that is gonna blow your socks off.
Do you have paper on it?
Oh, yeah, it's coming.
Well, I mean,
No, I'm not giving it yet.
All of you will get a follow-up email from Glenn after this, and again, so feel free to reach out
Every
to Glenn or
person,
myself.
every office is gonna wanna know me. Serious. We will blow your minds.
Is this similar to Fresh Start? You put 25% down and you get a loan 8%?
I don't know.
It's been out there for a while, this
Has
whole
it?
thing. Yeah.
We have something similar to that. We don't call it Fresh Start, but it's in the 8% range.
Right, they don't care, you do the foreclosure, short sale,
Yep.
next day you go in, if you have 25% down, and,
One day out,
it's not a one day off, no. Right,
one day.
okay.
BK
I have a question
foreclosure.
actually.
Who has
Everything we
short sale.
just spoke,
Yes.
you mentioned,
Yeah.
is this terms and rates and all those things Is there a chart that you have, so I don't have to keep
It's coming,
calling?
it's coming.
Yes, ma'am. Let me finish up here.
When you were talking about that 5-day close, like on that house he was talking about that had like 6 offers, and
Yes.
that's what they wanted to do, was to close in 10 days cash?
Yes.
So that would have probably been a good selling point. If we could have done that, we possibly
Would-
could have ended up with that.
Would have been a great selling point, and let me just touch on another part of that. When you all of a sudden think you've got the live one and you write the 5-day close, and you think you're gonna use us for that 5-day close, which is great, you still have to write it as a loan, okay? And we'll give you an approval letter without contingencies and that kind of thing. But where some agents have made the mistake while we were making this transition is write it as cash, and then all of a sudden we're contacting the title company and need title insurance and need to review the HUD, and everybody's going, whoa, wait a minute. So you wanna, thanks, John, good seeing you. So you wanna write that up and say, yeah, we're using a private money lender, Titan Capital Holdings, here's their phone number, here's their criteria, we'll give you an approval to go with that, and it's a 5-day close.
And we can get a pre-approval for so much to go in and negotiate.
Yes,
Because we're just private, no realtor. So
Yep.
We
Nope.
can just write it up as a loan, go in, we'll get closed in 5 days.
we issue what's called a proof of funds letter, based on information we got from you, maybe a specific property, maybe a range of properties, how much you wanna put into it. And it's a viable proof of funds letter, so yes, great question. Yes, ma'am?
Is that how you get the pre-approval to use it, to do all your, fill out all your paperwork and everything?
Yes.
Okay.
Yeah, do the application, give us some information in advance, and then, again, just contact myself or Glenn and let us know what you're looking for, this property address or this general area, or maybe you know you're in this price range, you're in the 200 to 250, or you're in the 100 to 150, and then whatever your range is, how much you want to put down, and then we'll do our upfront due diligence, and we'll provide you with a proof of funds
And you
letter.
want at least 30% equity into it?
30% equity, 20% down on cost.
Okay.
So, and the equity is going to be based on how we look at it. So, right now, people are still buying properties with good equity. Every once in a while, it just depends on the part of the valley. Somebody's buying a property, like, I'm just using for simple illustration, they're buying at $100,000. I'm checking every comp that I can and looking at everything I can, and I can't value it much over 100. Then I might look for 30% down on that
So you
property.
run comps for the
Yeah.
deal, and then do you do appraisal before you do it all? or
If
just
it's a
on top?
short-term close, we do comps and a BPO. If I'm funding in 24 hours, I'm doing comps. I might follow it up with a BPO just to satisfy, my investors, but we'll already have a loan out on it.
Are you
But
sharing
if,
the comps?
what's that?
Are you sharing the comps?
Oh, sure, yeah.
What if the comps aren't current in that area? Would you just go
And
out a little bit?
that's
or-
tough, because I know there are some areas where, you might have a home in this particular area, but there just haven't many sales in there recently. We've got a guy in our office here who's trying to refinance his home. He's in an area, waited 3 months for the neighbor to sell, and it provided a great comp. But otherwise, you have to just kind of reach out. Then you're looking at the asset and going, okay, how far do I have to go and where? And we do that.
High
So,
prices are,
yeah.
high price properties.
So, yes, sir.
Are you doing cash out on refis if the LTV's good?
Yep, as a rule, my cash out refi LTV is 65%.
65%?
Yeah. I've gone to 70 on extenuating, real good assets, real good borrower, real good property, that kind of thing.
And on construction loans, if there is a loan on the land, are you always asking for a subordination agreement at first?
Either subordination or we take them out. If there's a balance if there's a balance of money on the land, if you've got somebody that'll resubordinate to us or subordinate to us, that's fine, or we'll just take them out, and then our loan will carry through the process. So, right. You guys are weak on this side, come on. Yes,
I
sir.
looked at a property in Flagstaff, then would you loan on the loan plus the construction loan, for the land and the construction loan?
Yes, and that's a good question, and so let me clarify that. The question is, would I lend on land and construction? I'm not interested in land alone right now. I know land's coming back, but I'm not there yet. But I'll take down the loan if it's part of a construction loan to take down the land and build the home. Is that what you're
Does it
asking?
have to be a stick built, or can it be a manufactured
I'm not doing manufactured.
of any kind?
No, not at this point. So, got to get a little more coming back. Yes, sir.
What is your lowest interest rate would be for refinancing? And a
Own-
property,
owner-
you're gonna flip it.
Owner occupied or flip?
Flip. But as you know, market is kind of slowing down, and we don't know if it's gonna sell next month or 6 months down the road.
Right.
We have apartment already, but we have a little high interest rate. We were
Yeah, and,
sponsoring the finance.
and again, I'm 16 to 18% on those.
Gotcha.
If it's a smaller loan, I'm gonna be at 18%. If you're a bigger loan, I'm gonna be at 16, 17%. But on a short term, 6 months or less, I'm gonna be right 16 to 18. Does that answer your question?
Yep.
Yeah.
Doesn't help me, but it does.
Okay. Now, if you want to do a longer-term loan at a lower rate, you can still pay off sooner. We could talk to you about that too. So, because again, we don't have any prepayment penalties on it.
Yeah, that's the nice thing about yours. You don't have prepayment fees. That's big.
I love getting paid off.
Yeah.
Risk.
Really.
Yeah.
Well, yeah, we don't want to hold you hostage. And our construction loans don't have prepayment penalties either.
What if I do a like 60 flip a year? Would that change the rates, or is it gonna be same?
60.
Yeah, I do 60 to 100 a year.
60
Would
to
that
100.
change the rate that
Oh,
you're gonna give
homes?
it to me?
60 to 100 homes a year?
Yes.
Oh, yeah, our rate will come back down.
Okay.
I mean, if you're bringing us that kind of volume on a regular
Proven.
basis, then our rate will come back down for you, yeah. At that point, I'll look in the 14, 15% range.
What's your minimum lending threshold?
Ideally, I don't like to go below 50, but right now, we're 20, 25. I mean, we've got a repeat client who came up 10 grand short on a project, so we put together a deal to get him an extra 10 grand. Just because he, it's not, as you know, you do as much work on a 10 grand as you do on a 100 grand. But we're here to keep our investors in-house and help facilitate the transactions. He was 10 grand short on the project, so we restructured a couple things and got him an extra 10 grand.
Your positions are all first?
Always first. We'll do seconds, another good question. We do seconds and the rehab seconds, I think we're talking about over here. We do seconds and rehab seconds, but only behind our firsts, okay? So I've had some people reach out and go, hey, I've got tons of equity and you'd be behind a 50,000. We just don't do a second behind somebody else's first. Good question. So, Drew, do you have a question at all? Like, Dad, I want another sandwich. Both Glenn and I are here the rest of the day. We're going to send you a follow-up email. I really appreciate you all coming and attending. And call me direct, call Glenn direct. Were you stretching or were you asking a question?
No,
That was a stretch?
I can't sit this long, I gotta go.
Okay. Well, we try to get it done quickly. Thank you all for coming.
Thank you.
Thank you.
Thank you.